All right, so today is April 27th, 2023, and I'm going to go over something that is it's very big with beginner traders, and it's something that stands out and causes people to sometimes become really intrigued, fascinated, impressed, and the more experience you gain, the less impressive it is. So as you can see over here, we have a chart open, very clean, no indicators on it. Looking at a pure price action, we have our tape on our right hand side, which shows the price, the size, the time executed. But we're just looking at this, and we're looking at different breakout levels, and we're looking at this chart. And as we can see right now, we're in a period of consolidation, and we can I'm gonna go into that in another video, but right now in this video I want to go over winning percentages and what that means. So a lot of options traders, a lot of regular traders, forex traders, stock traders, equity, whatever, futures, they have, or they tell people, or they tell other traders their winning percentage rate, and some of them have a 90% winning rate. Some of them have a 20% winning rate. Some of them have a 5% winning rate. Some of them might say they have a 100% winning rate, and I doubt that they have a 100% winning rate. But a lot of traders say that they have different types of winning rates, and most beginners and most people think that the higher the winning rate, the better the trader. It makes sense, right? But it, it really doesn't matter. And the reason why it doesn't matter is because if you take 10 trades throughout the day and you're in and out quickly of 8 of them, and you have one big winner that you hold on to for the day, you can be you can have a 10% or you can have a 20% winning rate and just have a few really big winning trades, and you will be profitable. So what you want to look at is the ability to be profitable and not just the winning percentage. On the other hand, you can have a 90% winning rate, and you can close out on 10 trades. You can close out of 10 trades, 9 of those trades you can be profitable for only $5, $5 or $10, and then you can have a big loser for, I don't know, a few hundred or a few thousand. Let's say a few hundred if you understand risk management. So winning percentage does not matter. Of course, you want to, if you have the ability to precisely pinpoint your trades and enter into the right trade at the right moment at all times, then, and making the least amount of trades, that is a really good trader. But a lot of people, when they're trading, they're closing in and out of positions, especially day trading. They're closing in and out of positions very quickly. And let me show you an example of this right here. As we can see in this area over here, let me bring the drawing tool. Let me bring this, bring some lines out. So, that's it. Hold on. Drawing tool. Where is it? Actually, you know what? I'm just gonna show you this over here. Hold on, I'm gonna zoom back out. Spy. Here we are. We're gonna be looking at this area right here. This area right here. Let me zoom into that. So, zoom out a little bit. Just a little bit. It's kind of easy to see when here a little bit zoomed out. So as we can see over here, right here, this is a period of consolidation. The market isn't really moving that much. It's staying within this range. So let's see over here. It's bouncing up, bouncing down, bouncing up, bouncing down. Now right over here, for eager traders, they might want to short the market because it breaks our low level just a little bit. It's not the second candle that closes, it's the same candle, it's within the range, but let's say you wanted to get into a short over here. So you buy a put, you think the market's going to go down, but it turns back around and you close out on that trade. Let's say you buy one option contract and you lose $15. Then the market goes back into consolidation. As we can see over here, there's a breakout. So let's say you enter into a call right over here, 107.94, and you hold on to it over here, 109. It's about a change of $1 and a little bit. Could be, with one option contract you could make $100 from this. So if you take those two trades right there, that's a 50% winning rate just out of those two things. However, you're profitable. You would have had, maybe taking into consideration that $5 to $15 loss and this $100 to $115 gain, you would have made about $100 more or less right over here with a 50% winning rate. We're in consolidation right now, and let's say you just get into a call because you think it broke out over here, and it did break out. The price is the breakout price was 109.7, and the price right now is almost 410. It's almost $1. So yes, that is profitable, but you may have gone out of this trade and back into it and out of it and in it, and these could have been break-even trades, or they could have been minor profits. So the point that I'm trying to get to is that your winning percentage rate doesn't matter. What matters is if you're profitable or not. You want to make sure that at the end of the day, you're green, you're profitable, you made a profit for that day, for that week, for that month, whatever type of trader you are. So whenever you hear a lot of these experts tell you that they have a 90% winning rate, that they are winning the majority of the time, you have to look at their P&L. You have to look at their trades. The winning percentage doesn't matter as much. And that's something that I got lost in when I started trading as well. I thought that if somebody had a 90% winning rate, then they'll just be great traders. And they can be, but a lot of factors play a role in this. Like I said earlier in this video, risk management plays a role in this. So with that being said, this is the video for the day. Does winning percentage matter? No, it doesn't. Because you can have 10 trades, you can break even on 5 of them, you can have a small $5 loss on 3 of them, and you can have 2 $500, $1,000, $2,000, $3,000, whatever dollar trades. And that's a very small percentage of a winning rate. So keep that in mind next time you look into that.